Greetings, comrades. So I've pulled this question from the 2021 exam. What we've been asked to do is to reconstruct a bunch of ledgers in order to work out the amounts that will appear in the cash flow statement. I'm just going to focus on the capital ledger. If there's any interest, I'll do the other three at a future date. So importantly, this is what you want to look for in your reading times, additional information. So this fourth bullet point says we do have some cash drawings. We don't know what they are, but there were no capital injections. So remember, at the end of the reporting period, we close off revenue and expenses to the P&L summary, and then we close that off to the capital. Same with drawings, we close it off to capital. So therefore, the whole point of reconstructing the capital is to work out the mystery figure, which is our cash drawings. There's 5 things that can go in the capital account: opening and closing balance, capital injections, we don't have any here, drawings, and also profit. Okay, so let's start with our opening balance. So if we look over here in our balance sheets, at the end of 2020, we had a balance of 174. That's going to be our starting balance. Our reporting period ends on the 30th of June 2021. So this would have been, if we backtrack, 1st of July 1920. Our balance goes on the credit side because this is an owner's equity account and this is our opening balance. So then we get to our closing balance. Now, because we're reconstructing a ledger and formally balancing it, this is actually going to go on the debit side initially to help us work out our mystery figure at the end of the period, 30th of June 2021. I'm putting it on the second row for a reason. You'll see why later. 239,400, and then that balance would carry forward to the start of the next period. Okay. There's no capital injections, but again, we're trying to find out drawings. So I'm just going to put in the drawings entry here. Okay. So what we're missing here is our net profit. Now, be careful with this one. So we close off net profit to the capital account. It's going to increase it. When we increase owner's equity, that's going to be a debit entry. But there's no such ledger as net profit. So whenever you're cross-referencing, you must use ledger titles. Common trap. So therefore, our cross-reference for this, which is increasing our capital, is our profit and loss summary. Do not abbreviate. You will lose marks because being consistent on this one, profit and loss summary. So if it's a loss, you're going to put it on the debit side because it'll reduce the owner's residual claims on the assets. So now we're in a position to total this up to 295. Because we're formally balancing this, you'll need to have a matching total on the same row of the ledger. And now we're in a position to work out our drawings. So drawings would be closed off to capital. It reduces our capital. It's negative owner's equity, so that's why it's a debit entry. So we simply subtract that closing balance from our total, and we end up with 55,200. So that would be our financing outflow in our cash flow when you get to that question later.